All right, ladies and gents, let's get right to it. The confidence engine. So today, you really want to talk about building confidence in trading because you know often we think, hey, we need to get our equity curve up and moving from bottom left to top right. We need to get some traction. We need to get some numbers on the board to build confidence. And sure, the better you do at trading, the more likely you are to be confident in the next thing you do. However, what do you do if you're developing trading? You're trying to improve your trading. You're trying to get better. You're just trying to kick things up a gear, and maybe you haven't got a track record to look back on. Maybe you haven't got spells of what appears to be kind of green shoots and good trading to look back on. So today, hopefully, what I want to do is give you a few ideas and ways to build your confidence up, some kind of different mindset approaches, different ways to look at the market, the kind of sort of lens to look at the market through, and some tactical ways to kind of build the confidence up so that you're not relying on your P&L. Actually, we'll talk in a moment about why I think that relying on P&L is a bad thing anyway. Okay, so first of all, I just want to remind you, ladies and gents, of course, you know this already, but trading is very risky. If you're trading a spread bet or a CFD product, you're trading with leverage, you're trading on margin, and that means that you have a lot of risk when you're taking the trade. Obviously, when things work great, you're margined up and you're long, then you're going to get a good payoff. But there's the flip side to that as well. And the way that the human brain works is that losses can impact us a lot more mentally, and you can be deer in the headlights. So just understand how trading with leverage and margin works. Understand that most traders lose money, and understand that you really only want to be trading with money that you can afford to lose. I know you know this already, many of you, but it's worth saying because I just want people to be absolutely crystal clear on the risk in this business. And we try to manage the risk, of course. We use stop losses, we use smaller position size, we understand gap risk, we understand headline risk, slippage. Understanding risk helps us manage it. We can never eliminate it completely, but of course, if you eliminate it completely, there's going to be an upside. So we're trying to play this game of let's manage the risk as much as we can while still giving us that upside potential. So I guess the long and short of it is just make sure you understand the instrument you're trading before you even consider. And of course, Pepperstone have got free demo accounts. Play on that for ages, get used to the thing before you even risk a penny. And then when you feel comfortable, then when you feel ready, take it steady. No rush, just do things a bit at a time. Okay, so today we're going to talk about the confidence engine, building unshakable conviction in your process. And there's a great quote here by Bruce Kovner. It says, the hard part is developing confidence in your own analysis. So in other words, everybody struggles with this at some point. It's building that confidence up and getting to a point where you can actually trade and feel comfortable. And listen, we never, you know this, and I always say this, we never know the outcome of a trade. And everyone tells you they know what's going to happen is not telling you the truth. We never know the outcome of an individual trade. However, that doesn't mean we can't be confident. I think the way to approach trading is to say, hey, I'm going to flood myself with confidence over my process, the way that I trade this trade. However, I've got a stop loss to manage the risk if it doesn't go my way, because anything can happen in the markets. That's one thing I've learned from a couple of decades in this business, is that literally anything can happen, and it will do, right? So it's why risk management is so important. But building confidence is kind of important too. So I guess I should introduce myself briefly for those of you who don't know me before we kind of move on. My name is Mark Holstead. I've been trading for a couple of decades plus now, so almost 25 years. I run a website called Traders Mastermind, and I send out a free daily email that goes out each morning, kind of all sorts of things. We talk about strategy, we talk about mindset, risk management, trading, grades, or even books or interviews and stuff that I've seen. Basically anything, if you're into trading, you'll enjoy it. It's completely free. If you go to the website, you can sign up for that. And actually, I have a discipline tracker, which is a way to help improve your habits over time. And that's completely free. I think we've had 5,000 people download that, but you can see that on the website as well. If you go to tradersmastermind.com, download that. It's a Google Sheet template. If you're trying to improve your discipline, you're trying to level up in a particular area, this helps you kind of improve month to month. And obviously, we're doing this webinar in conjunction with Pepperstone. Thank you, Pepperstone, for partnering with me on this. Then we talk about cool ideas like this and things to help you move forward in your trading. Obviously, go and explore them as a broker. Go and see what they offer, kind of some of the spreads, some of the platforms and stuff, and see if they're right for you, your CFD spread bets, that type of thing. Okay, so let's get rolling. So why does confidence matter? Confidence matters because it's the engine that runs everything in trading. If you have low confidence, you're going to be hesitant. You're going to have doubt over the next trade you put. You'll have this poor decision flow where you're kind of second guessing things every time. You need that level of confidence. And okay, there is a fine line between arrogance, cockiness, let's say, and confidence, and you kind of want to dance that line from time to time. I think where some traders go wrong and they sort of jump into the arrogance section is when they kind of think I know better than the market. I've got this mastered, and the market says, "Ah, sir, we have a special room for you. Please step this way." Are you just to confirm you think you know everything about trading? Very well, sir. Step this way. You can go past the line, a velvet rope, open the door, in you go, shut the door, trap door. Oh dear, have you lost all your account? Sorry, sir. That's just the way it goes. It kind of the way the market works, right? So we need this level of confidence that's high, but not over the point where it becomes arrogance and cockiness. Because the market has a very, very, very quickly can knock you down a peg or two if you think you're the big swinging. You know what? Okay, so we don't need results first. Confidence can be built. This is what we're going to cover today, and it's this chicken and egg problem. Confidence gives you better execution. Better execution most of the time will give you better results, and better results leads to more confidence. It's this self-fulfilling prophecy, right? You get good results, you look back at your results, you say they were pretty good results. I'm feeling good about my trading. The next trade tends to be better executed. Never know if we're going to make a profit or not, but we're trying to improve the edge over time, build the confidence. You get the idea. So what do you do if your results aren't where you want them to be? Because you can't go and say, I'm going to leverage on I'm going to leverage on my results to boost my confidence. You have to build confidence manually. Okay, so let's talk about that. And this is for you if you're a trader who is whatever level of experience, to be fair, who is just maybe struggling to get confidence in the approach, the methodology, all this type of stuff. Yeah, this is kind of for you to help you get through that roadblock. And once you start getting some results, once you start improving your performance, that then just starts to turn the wheel of confidence. And so it becomes like this flywheel that just takes a hell of a lot of time to get spinning. But once it's spinning, it's difficult to stop the thing. Okay, so building trading confidence. We want to be prepared. We want to have clarity on our execution process. We want to be intentional. I wrote this actually in a daily email a couple of days ago about intentionality in trading. I see too many traders. And by the way, in Traders Mastermind, also see loads of traders, developing traders who are doing exceptionally well, traders who are struggling. So I kind of see this. And one pattern I observe sort of from my own journey in trading and from seeing others is this level of intentionality, right? If you're intentional about each trade you take, whether you're trading on, whether you're scalping, whether you're swing trading, whatever it might be, that tends to get better results. So we want that intentionality, and we want to develop the behavior that matches the trader you want to be. So something I think I've said before, and it's worth mentioning again because I believe it's quite powerful, is to kind of think about the trader you're becoming. Just visualize them in your mind and start to think, how does he or she sit at the trading desk? What is he looking at? What is his account size? How does he deal with loss? How does he deal with slippage? How does he deal with being stopped out? And, does he bang the table and rant and rave? No, he probably doesn't, right? How does he prepare for the trading day? All this stuff is, you know it. And this is your subconscious saying, yes, I can picture that man or that woman and I can see exactly how they behave. And it's mirroring that behavior now to kind of build and craft the trader that you're trying to become, right? So the behavior needs to match the trader you're trying to be. So all those things there help to build the confidence. It doesn't necessarily come from P&L. I'm not going to lie to you. Of course, you have good results in the market. You have a couple of great years. Your confidence can't help but be lifted, right? But that just comes naturally. You have to build it first to get the momentum to then potentially get the results that you want. So let's think about intentionality. So what I mean by this specifically, you just slow things down. You slow down your decision making. Now you might be like, Mark, I'm a day trader, I'm a scalper, I like to be active. Okay, fine. You choose how you want to trade. I'm never here to tell another person how to trade, but you can still slow things down. You may be a very active scalper, but you can say to yourself, hey, listen, I do the best when I'm scalping flushes through key levels, or I'm trading around the prior low, for example. I'm kind of looking for those little mini flushes. I'm buying those, I'm selling those, I'm buying little breaks to the high side, selling out. I've got 4 or 5 different plays that operate within that sort of area, but you still slow it down and say, okay, well, I've got nothing to do until then. And you're considered with your play. You're considered with the methodology. You're considered with your setups. Day trading, I want to see this level break. I want to see it hold below, retest. There's a certain, we're playing this game of chess and we're waiting for the market to make a few moves, and we plan how we operate within that framework. And we say, okay, let's just calm things down. There's no rush. And you know as well as I do, we've all been here, right? You rush things, you start to rush a trade, even you rush into your trading desk and you're not ready, you ain't on form. You know you're not on form. It's like anything in life, right? If you're rushing to do stuff, it creates an anxiety. It creates the stress levels increase and decisions become a little bit poorer. If you're late for a meeting, you're late for an appointment, whatever it might be, you're rushing to the car, you kind of forget stuff. Maybe your driving is a little bit more erratic, not quite as safe as it could be. All your anxiety level picks up because you're trying to do something in a short period of time and you feel that element of rush. And actually, that's a great analogy, right? Because how many times have you done that? And when you say to yourself, you know what, I'm going to be late. It is what it is. I'm going to be late. There's nothing I can do about it. The traffic is the traffic. The situation is the situation. I'm going to be late. And it doesn't matter how late I am now. I can't control it. Doesn't that take the anxiety away? The outcome is the same, but the anxiety is lifted. You kind of go, you know what? Let's just put some tunes on here, sit in the traffic, just relax. I can't really do anything about this. And that just lifts the anxiety and burden of performance off your shoulders, being there on time. Same with trading. When you slow things down, you're intentional, you're calm, you're considered about your actions, it removes a lot of the anxiety, which in turn improves confidence, improves the correct decisions, the right decisions, planning deliberately, sticking to the trades you want to, not the trades you feel forced to. Because very often, if we feel rushed or we're not intentional about what we're doing, we come into the markets and we go, oh, what can I see? What can I see? Oh, gold's doing this, dollar yen's doing this, cable, oh, NASDAQ, FTSE, click. And you kind of, right, I've done my job now. And you kind of sit back and, what am I doing, man? That's not the way to trade. So just planning, sticking to the trades you want to take, not the trades you're forced to take. And think about this as being intentional is really trading from clarity, not emotion. If that's the kind of North Star you have, then that's going to help loads. Okay, so let's move on to a concept that I've talked about a few times before. And I love this concept. This visual just works for me, and hopefully it does for you too. Is imagine you've got this bank, all right? And you can visualize a piggy bank if you like, the old school piggy banks, where you kind of put a coin in and the piggy bank grows. You want to get something out as a kid, you pop the bottom off, wouldn't you? Shake it and take the money out, work out what you had and put it back in, and kind of work like that. And the thing is with that piggy bank is when it's empty, you can't take any withdrawals, right? Or if it's very low, you shake it out, you go, oh, I've got 15p, what can I buy? A chomp, whatever it is. You guys buy no chomps, right? From the years gone by. But the thing is that, this is the concept of, if you think about that from a kind of coins perspective, now think of it from a confidence perspective. What we're trying to do is we're trying to make deposits into the confidence piggy bank. So this is how we build confidence without the performance to match it, so that we can get over that hurdle of getting some traction, some performance to look at, to build the confidence, to get the flywheel going. So every good behavior you take or make is a deposit in your confidence bank. So you highlight what's a good behavior to you. But example, what it might be, you do your pre-market checklist on time with plenty of time and thoroughly. Check. You do journaling, whatever that looks like to you, whether you're using kind of voice mode on ChatGPT that I've talked about a lot, or whether you're using kind of a spreadsheet, or whether you're using like Trading Plan Pro, or whether you're using, one of the trading journal softwares, fine. Or writing down a notebook, who cares? But you're doing something. Ching, deposit in the confidence piggy bank, following your trading plan. Big deposit. There you go. That's a whole pound coin in that one piggy bank. Skipping trades that don't fit your bill, little deposit. Walking away when you kind of feeling the emotion and the anxiety or whatever it might, frustration, anger of your performance. Chunk. Being done when you're up and you decide you're going to be done. Hey, I'm up £500 today. That's my goal. Fine, I'm going to walk away. Whatever it is for you. You see all these small little wins. You place a deposit, place a deposit, place a deposit, place a deposit. And the point is that over time that grows the piggy bank. And so we know that in trading, you're going to take dents to your confidence. It's just the nature of the beast, right? You look at some of the greatest hedge fund managers in the world. I can think of, say Bill Ackman, right? When he runs Pershing Square, he had some horrible trades on Herbalife, and I think it was Valiant Pharmaceuticals, right? And I appreciate he's not as active as perhaps you, and he's managing, mega money. But even he, his confidence was hit by these deals that didn't work for him. So we are going to get our confidence bashed from time to time. It's going to happen. And how do you deal with that? Well, Bill Ackman dealt with that because he's got big confidence and a big bank balance. So how do we deal with this? Well, we deal with that. We don't want obviously to draw down as that much that it's damaging the financial balance, but if we're damaging the confidence balance, if we've got the deposits in, we've made the deposits with those small things, pre-market checklist, journaling, sticking to the plan, walking away, dunk, dunk, dunk. And then when we do need to make a withdrawal, we can. If we make a bad trade, if we have a little slip in discipline, if we do something impulsive we didn't really want to do, if we have a streak of kind of just things that we think, oh my God, it's the worst trading ever, it's no big deal, right? Because you've built the confidence up. And so when you take those withdrawals, which are going to come, it doesn't take you back to square one. You've still got a kind of baseline, and then you build the confidence again and build the confidence again. And what this does is, instead of being the whole feast and famine thing that many traders do, is, you're going to have drawdowns, you're going to have challenging times, but you're kind of building things up, and the moving average, if you like, of the confidence slope is going in the right direction. And so with deposits, mistakes don't destroy you. I've put here, without deposits, every mistake feels fatal. And you know this as well as I do. Maybe something else in life that you've done well at or achieved something in. If you've got confidence when you go through a spell where things aren't going your way, it doesn't, it may dent it a little bit. You're like, oh, it's not great, but you still got that deep rooted confidence. And that's kind of what you're trying to build in trading. So let's think about a typical day, like the confidence version of a typical day. We want to be slow, intentional, calm, deliberate. And this is what builds the confidence, asking ourselves, what trades do I want to take today if you're an intraday trader? If you're a swing trader, maybe the same question, but hey, nothing's setting up yet. I'm going to wait to the close and then do my analysis again. If I'm a day trader, it's like, okay, what are the levels? Am I going to wait for a point of control to develop? Am I going to wait for a VWAP fade in the late afternoon breakout? These are the setups I think are going to work today. I want to take the opening range breakout. What is it? It's intentionality. What's my ideal environment for this? Well, I want to see a kind of fake out to the high side, a reversal, a trap. You lay it out, play that game of chess. Where's the danger points? Okay, we've got some headline risk coming up at 130. I'm sometimes prone to jumping in a bit early on that trade before I've seen it fully set up. So note that down. Am I even trading today? Well, I won't if we kind of just sit there and do nothing in the first hour and the range is poor. I'll come back in the last hour. You get the idea. I'm just kind of thinking out loud here of all the things that a trader will go through, but you want to operate from a perspective of I'm expecting good outcomes. We don't know the outcome, of course we don't. That's the nature of this game, but ultimately we're trying to build the confidence and just be calm. Again, imagine that future self. How does he act? How does she act? He's calm, thoughtful, intentional about the way that they trades. So we did cover this, so I won't dwell on this slide too much, but confidence just collapses, right, when you feel rushed. You know it, I know it. Um, and so an easy win, and the end of the day, guys, something to think about in trading is that there are some things we can control and some things we can't control. We can't control what the market does. We can't control what our trades do. We have zero control over that. Although we like to have some control, we think we've got control, but we don't, right? And that's why we go into each trade with a kind of open mind, with our risk caps, possibly asymmetrical trade, trying to get edge where we can, and knowing or believing that edge is going to work out over time. So we can't control that stuff. What we can control is us. We can control our preparation. We can control when we come to the screen. We can control our behavior. To a certain level, we can control our risk, as long as we're not taking silly risk on Nvidia earnings overnight or something, and you're kind of wondering what the hell's going to happen if you get a gap or overnight weekend risk. You can control the risk. And so, what are the things you can control? If you prepare early, if you know your markets, you know what would make you act, an area to consider doing business at, your data risks, all this type of stuff, right? And the quote here is that clarity removes stress, and stress kills confidence. And just like I mentioned, with the analogy of you're late for an appointment or a meeting or whatever it might be, and you kind of the moment you go, you know what, it is what it is. I've got to own it. I'm late now. I'm not going to make up the time by driving like a madman. It is what it is. That's the way it is. I can't control that from now. But to avoid getting to the point in the first place, it would be making sure you're early, making sure you're planning your route, making sure that everything's okay with your car. You got enough fuel. It's not going to think of some major problems. You've got everything you need to take with you. This is just common stuff that we learn to do as adults as we kind of go through life. And the same with trading is let's eliminate all the possibilities to create stress by being prepared, getting there early, planning out the action for the day. All this type of stuff is really where we want to be with our trading and just remove any kind of pressure unnecessary. It's going to be enough pressure. The market's going to pressure you enough, right? It's the way it is. We with the market, yeah, and we can't if we can eliminate the pressure we put on ourselves, that help loads. Okay, so let's talk about the strategies. So one thing to consider is that I believe that some strategies are more conducive to confidence building than others. So let me explain what I mean by this. But like, what about, man? Um, if confidence is the main goal, and let's assume that we're kind of working on building a confidence, I think avoiding strategies with low win rates is a better approach. And let me explain why. We know that we have two levers to pull, right? We've got one which is the risk reward lever. So we're trying to push that as high as we can. In other words, the higher that goes, then the better our outcome's going to be. If we're risking 1-to-1, yeah, fine. 2-to-1 or 1-to-2, we're risking 1 to make 2, 3-to-1, 4-to-1, 5-to-1. As that goes up, then our probability of doing okay on the month, on the quarter is going to be high, right? But we've also got another lever we're pulling, or dial, if you like, and that is the probability of success. So has this trade got a 50-50 outcome? Has this trade got a 70-30 outcome? We never know for sure, but what we're trying to do is we're trying to avoid trading strategies that have a low win rate, but they win big when they do. So an example might be you're holding every trade for 10-to-1, right? You're looking for massive volatility breakout moves, but you know they only happen, maybe 15% of the time. Now, mathematically, that's going to work out as a profitable edge. But psychologically, if you're building confidence, you're going to lose, 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 lose. You can have a massive streak of losers before you hit that winner that pays for the losers. So a better way to approach it, I think, when you're in the developing trader phase and you're trying to boost confidence, is to say to yourself, hey, listen, I want to boost confidence here. I just want one-to-ones, right? I don't want to try and get home runs here. I know that actually, if I'm trying to extract as much profit as possible, I should probably hold this trade longer. I should probably add to the trade. There's probably actions I should take that are going to potentially yield the best outcome over time from a financial perspective. But if I'm trying to build confidence, then what you want to do, I believe, and again, I'm not here to tell you how to trade or how to behave, but I think from experience and seeing others, is that taking A to B trades 1-to-1, you're risking $100 to make $100. You're risking £250 to make £250, whatever it might be, 20. It doesn't matter. It's that sort of play. And you're kind of looking for one-to-one targets. You have a clear exit criteria. It's a level-to-level type trade, and you can get the frequent reps in. If that can become 60% win rate, 65, 70, you can get in the higher win rates. Then over the 10 trades you take in the week, then mathematically, and it's not going to work out like this, 7 of them are going to be winners, 3 are going to be losers. You can stomach that from a confidence perspective. And yeah, you're not going to hit home runs, but it's just this, okay, there's a winner, there's a winner, there's a loser, there's a winner, there's a winner, there's a loser. That's much more palatable than loser, 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 winner, I'm up. Very, very different mentally, even though mathematically it might be better to do that. So consider this. Consider auditing the strategies that you deploy. Consider auditing your framework of how the risk parameters and the target parameters, and consider kind of dialing stuff down so that you have that one-to-one risk reward, you have that A to B type trade, and just by the way the market works, mathematically, it's going to improve your win rate anyway. Now, you might say, well, how do I go further? Do I go down to kind of 1/2-to-1? Well, I know a trader who does okay working on 1/2-to-1. Obviously, they have a very high win rate to accommodate that. But that's up to you. You get the idea of what we're trying to do here. We're trying to improve the reps, so you get win, and you feel good. And actually feel good. You build confidence. You do more work. You do more homework. You do the stuff you're supposed to do. You build the confidence. Once that confidence returns, then and only then you start exploring ways to kind of improve that P&L, holding the runners a little bit longer for those stretch moves, those breakouts. You may, a typical trade might be I buy at A, I've got a kind of high at B, A to B trade perfect. But, if you're trying to hold it for a bit more, you might be like, oh, I'm going to hold it for the break and actually be prepared to give it all back because actually if it breaks, I think it's got a room to run 3-1. You don't want to do that when you're kind of building the confidence, but when the confidence returns, that's when you start looking for these bigger winners, adding to winners, pushing the risk reward, aiming for multi-R plays. If we think of confidence first and kind of return second, I think that's the way to do it. So, okay, fine. Talking about adjusting strategies, how else do we build this and boost this confidence? The other thing is to think about deposits in the confidence bank, the piggy bank of confidence, as opposed to profits. If we're focusing on that exclusively, then we start to adjust our behavior, right? If our goal is to improve confidence, thinking that actually, I'm going to work on this and my equity curve will fall into line over time, but this is what I need to sort out first. Because I've seen many traders, by the way, they've run up an equity curve. They really don't think they deserve it. They've got a bit of luck, not very confident, and it just comes out their account as soon as it goes in. You don't want that. Of course, drawdowns are inevitable, but you don't want this feast and famine. You want to build the confidence that kind of helps support it on the way up, so to speak. So, some behaviors that you might want to consider is things like, hey, I'm up on the week. It's Thursday. It's Wednesday. I'm not going to trade Thursday or Friday. It's Wednesday night. I've had a good week. I'm going to take the rest of the week off because I want to go into the weekend feeling good about my trading. That is worth way more than an extra 3R or whatever you're sort of looking for, because devastation of kind of be feeling good about your trading and going back again is so bad when you're low on confidence. You feel good, you lose it all, you feel crap, you go into the weekend feeling crap. That amplifies way more than it would do if you had the confidence high. But okay, it's one of those things. So you want to be aligning all your decisions with boosting confidence. So things like, I'm up okay on Wednesday. Fine. I want to bank that for the week, maybe paper trade, maybe trade really, really small, whatever it might be, because you want to bank the confidence and let that feeling marinate in you, right? You want to marinate in the feeling of good trader. I'm doing all right at this, because that slowly helps to raise the confidence. And, this is the type of thing where you just go, okay, this helps me, this supports me. So real world example, we just shared this, but very similarly, you go, okay, I'm up on Wednesday. Maybe you don't trade Thursday, Friday, right? Because you're trying to strengthen confidence, not squeeze every tick. That could be intraday as well, by the way, which is, hey, I'm up today really big, or I'm up, my first trade was good. Let's say you made 1R on the day. You're just trying to build confidence. You're like, I made 1R, I'm up, done. I'm not going to trade the rest of the day. You might be like, that doesn't make sense, Mark. Yeah, if you're optimizing for equity curve, it doesn't make sense. While things are working, you put your foot on the throttle, you do more of what's working. We've talked about this many times before. However, if the objective is to build and boost confidence, you're not looking at P&L. You shouldn't be looking at P&L. It should be, have I done my process? And there's nothing better than coming in early. You've done your pre-market prep. You've done your process. You've prepared for the trading day. You've considered the trade, you've waited patiently for the trade, you've passed on substandard trades, you take the trade A to B, you take it out. That is a feeling you want to sit on and let just sit in that soul of yours and go, man, that feels good, because that's what's going to boost the confidence. Okay. Not hammering away, oh, just about in the green on the day and feeling like you just had 12 rounds with Mike Tyson, right? You just want to calmly do anything you can do to boost the confidence, protect that feeling of competence. And that's the most important thing. It's building and thinking about all the behaviors that you can do to ensure that your confidence is boosted and is increased. And worrying about the equity curve later date. Okay, so another thing to consider here is intentional goal setting. We're not trying to improve everything at once here. We are just picking one goal for the next 30 days. And I kind of wanted to mention this while we're talking about confidence, because I see, here's the analogy that I have and the visual that kind of comes to my mind, and how I kind of speak to traders sometimes when I feel like they're doing so many things at once. Like, whoa, 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 whoa. Imagine you've got this dashboard. If you've ever flown a plane, you've got a kind of dashboard and there's so many buttons and dials on it and gauges. You're like, well, if you first time you go in, like, I don't know what's going on. Obviously, if you fly and you're a pilot, you know what all these things are. Same if you were, I don't know, a nuclear reactor operator, right? Imagine the old Homer Simpson type, where you've got this massive dashboard of stuff going on, and you like, there's a dial here, there's a button here, there's a lever here, there's a gauge here, and you look at all that, and it's just confusing. And what you're trying to do is trying to get the perfect setting so that the thing works. The plane takes off, or the nuclear reactor reacts perfectly, it doesn't blow up, right? In bad analogy, you get the point. And so if you go and imagine trading is like this, you got this dashboard. If you go in and you're like, right, that one says entries, I'm going to tweak that entry. That one says win rate, I'm going to pull that up a little bit. That discipline needs sorting as well. Let me press those buttons on there. I need to work on the trigger. Let me just press the button there. You're adjusting all these dials, trying to find the solution, if you like, and it's almost an impossible task because all of these are really important on their own. But when you're trying to do all of them at once, you're never going to find this combination that's going to unlock the next level for you. And so, one way to do it is to be intentional about your goal setting and say, hey, you know what? I'm not going to try and improve everything at once. I'm just not going to do it, right? I'm going to pick one goal and I'm going to go work out what I need to do for that. So I'm going to get my entries as good as they can be. And that's that dial. You go, right, yeah, my entries are pretty good now. Wait for this in this scenario. Wait for the close of a candle when it's this scenario. I do this. I take a break when it's in this scenario. Okay, that feels like it's pretty good, better than it was. Dunk. Then you go, right, now my discipline needs some work because sometimes I feel a little bit frustrated and that kind of causes me emotion and FOMO. How do I deal with that? Let me do some visualization. Let me do some breath work. Let me do some dial down the size. Let me put some fixed rules into my trading plan that keeps me out of trouble in choppy markets. Maybe some sort of indicator filter. You get the idea. And so you adjust all these things one at a time as opposed to all at once. And that, again, back to that intentionality, that focus just creates so much more momentum. And the thing is to, what we're trying to do here is we're trying to create this flywheel, right? This flywheel, get this flywheel going, confidence, discipline, risk taking, consistency. If you start to get all these in line, it starts to build, and confidence improves discipline. Discipline improves your ability to take good, considered risk, ultimately improves consistency, which improves confidence. It's just a self-fulfilling wheel, right? It just goes round and round. And the idea is that there's probably points where you're trying to adjust areas and trying to patch it up and improve it, but that supports everything else in the wheel. And so, if you can make these deposits in the confidence bank by doing the things that you can control, then great, right? Because that is then going to help improve your discipline. Because you say, hey, my confidence is quite high. It's not me. I don't rush into trades. That's not who I am. I'm confident enough to wait and be at peace with the fact that I'll miss this, but be patient enough to know that there's going to be another trade coming around the corner. And it's this constant cycle of improving in all the different areas that support kind of the next area. Okay, so let's imagine now we've gone through some of the processes and ways to maybe think about confidence and deposit in the piggy bank and some of the strategies and techniques to kind of boost confidence from a kind of strategy, from a trading strategy perspective, from a kind of decision perspective or behavior perspective. So let's imagine now that you have a low confidence period and you're thinking, hey, how do I recover from this? I feel pretty crap about my trading. It's not looking great. I don't have much to go on here. I know a lot. I don't seem to have much results here. What do I do? I feel like my confidence needs to come up first before I do anything else. Okay, first things first, I want you to take off the glasses that mean you're looking at the market through the lens of improving your equity curve, right? All traders have these glasses on and it doesn't serve them most of the time. They're like, how can I make money? How can I make money? How can I make money? Those are the glasses that you're looking at through. And that's what the mob's looking at trading through. How can I make money? How can I make money? Because that's why you're in the business, right? I get it. But that intentionality is not where you want to be. You want to take those glasses off, put on different lenses, and look at the market through the lens of I'm rebuilding confidence. That's my sole objective. It's not to make money. I'm not here to make money. Worry about that later. I need to build my confidence first, right? And so you put those lenses on and you look at the market through a different lens and you say, hey, okay, how do I boost confidence? I shrink my trading size so I don't feel anxious and I don't feel frustrated when I have a loser. I simplify things right down. I reduce my trade frequency so I can make this considered decisions. I prioritize all the things that I know support my P&L over P&L. I don't care about P&L. My job and objective for the next week, 2 weeks, 90 days, or whatever it might be, is to build my confidence back up. I know I need that before I even consider P&L. And so if you go in with the intentionality then of building that confidence up and doing some of the things that perhaps we talked about, like simplifying the trading strategies, A to B stuff, sorting out your behaviors if you're up on the week so you can boost the confidence, anything like that. You're prioritizing confidence building and stacking the confidence deposits over everything else. That then becomes your main goal. Your brain's very good at doing stuff that's aligned with that. And so really, just that is just to be sort of considered of, okay, I like that visual of, I put a different lens on. I look at the market through a different lens. You know, when you kind of put different glasses on at different colors or whatever, it looks different. The world looks different. And that's how you want to look at the market. It's like, okay, everyone's looking through the lens of make money, make money. Okay, fine. That's not really served me. I mean, I need to boost confidence. So now you see opportunity in things like, okay, I'll just take an A to B trade, as opposed to if you were looking at through the lens of make money up, like, oh, do I hold that longer? Do I go heavier on that? Do I do this? It's like, no, I'm just trying to build confidence. And so doing my pre-market checklist, doing my journal, taking these simple A to B trades is what's going to help me, taking my losses and not feeling like it's a problem. So the new operating system becomes not how do I make money, but what builds confidence today. And that then becomes the compass for every decision you make. That's your North Star. I'm trying to build confidence. Simple as that. I'm not trying to make money. And that is what helps you build confidence over time. So let's summarize what we talked about here this evening. Number one, confidence is built, not gifted. You can't be given confidence. You can't go out and buy confidence. You have to be, this is with any other endeavor in life, right? It's something that you have to build. And you can be intentional about building it. That's the beautiful thing is you can come into trading and maybe your confidence is battered, but with a 90-day or even 30-day focused attempt and effort at building confidence and making those deposits, that can really revolutionize the way you think about trading. And you can be quietly confident, say, listen, I don't know everything. There's gaps in my knowledge. I've got some weaknesses, but I'm pretty confident actually in this area. And if I stay in this and I do this and I do that, I think I'll do all right. And that's the spark of something that starts to build. So think about those deposits, dunk, 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 in the confidence piggy bank, compound them more, 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 more. Being intentional about how you trade, being intentional about your process, that creates clarity in what you're doing. There's little confusion. You go, hey, I'm doing this. I don't know whether it's going to work out, but I'm buying at this support, looking to come up to that resistance, the level to level trade, choosing a strategy that helps support the goal of improving confidence, which is not some strategy that has a really poor win rate or some super complicated thing where you're hedging this against that and doing it. No, just like, hey, what's a very simple strategy that I can just wait for, bide my time. Okay, market's coming down. We've made a pin bar through support. We've had a close. Okay, I can put a stop below the support level. It's a Wyckoff spring type trade. I can just look for a one-to-one. I'm just using that as an example, but you get the idea. There's some simple strategies that just support confidence because they're easy to operate. They have a reasonably fixed criteria and they don't require you to overthink things and you're trying to build a confidence. Can I execute clearly? Can I execute cleanly? Can I stick to the risk rules? That in turn builds confidence. And then as you start to get some wins and you start to get some kind of traction. By the way, even if you've had a really brutal time of it, your equity curve's getting battered, sometimes just steadying the ship, few losers, few winners, few losers, few winners. Just that alone sometimes helps boost confidence before you kind of turn things around. Protect your wins because that is boosting confidence. You're up on the day. Or this is probably not the advice for someone who's trying to maximize P&L in the quarter, but and by the way, I don't give advice out here. Just what I wouldn't do if I was trying to maximize P&L on the quarter, I would do more. I'd like push harder, see where I can apply the pressure to get more back from what I'm doing that's working. But if it's a confidence game, looking at market through the lens of let me improve my confidence, anything you can do to protect the win. I'm up on the day. I made one great trade this morning. I want to feel good about that. Don't be tempted to go back in and ruin that because that's a big confidence deposit. Forget about the P&L. Same if you come into the week, as we just talked about. Anything you can do to help boost confidence and marinate that feeling of intentionality and yeah, I'm doing the right thing, and making confidence the focus, and results second. Again, looking at it through that lens of, okay, this is what I'm doing, this is how I'm approaching the market, and I'm trying to boost confidence and build confidence. And if you can look at it like that, I think, and if you can be considerate about that approach, I think that can make a big difference. I think at that point, then you go, hey, you know what? I've built this confidence over time, and then you can start to kind of improve on that and build on that. Whereas if you're just constantly in that cycle that I see a lot of traders is confidence low, maybe have a couple of winners and they feel good about trading just because they've had a couple of winning trades, and it just goes as quick as it came. They feel bad again, and ultimately that just chips away, chips away, chips away. You want to build the foundations of good confidence so that regardless of performance, and we know that it's going to be eroded in a way, regardless, it's going to have a little bit of an impact on your confidence. If you're having a bad run or you're having some stagnation, whatever it is, it's not eroded completely. You've still got a layer of foundational support there that you can build on for the next run. And so think about that intentionality, aligning your decisions with boosting confidence if you're going through a slump, and it may be adjusting strategies to accommodate this. I want to improve my confidence as opposed to maximize my P&L. All right, ladies and gents, it's been an absolute pleasure. Thank you so much for joining me on this fine evening. I hope you found some value from this, and I hope you've got some tactical ways to improve your confidence. Of course, keep the risk managed. Lots of data coming up at the moment. Lots of things going on. Markets are volatile. Make sure you keep the risk, understand the risk, your position sizes, sensible, all that other good stuff. And if you're on the sort of path of building confidence, then anything you can do um to boost that, to make those deposits in the piggy bank, then do it. All right, ladies and gents, see you next week. Take care. Bye bye.